Hey everyone, it's George from Blockchain DXB and today is the 11th of August and the market does look a little better than the previous days and it does look like the second quarter of this year may be better than the first quarter of this year, and you know the reason why. It is only because of the midterm elections, and in case if you're wondering why there's so much chaos going on in the US right now, so far as the politics is concerned, the answer is pretty simple. The midterm elections takes place on the 8th of November and the Democrats will do absolutely anything in their power to give a positive narrative in the economy. Now with mainstream media on the side, it is so important when it comes to politics to do your own research and get your information from the first source. The big news for today is about the CPI data, that is the Consumer Price Index data. It is out and the inflation number is still at 8.5%, which is still extremely high, but in comparison to the previous month, it has gone down a little bit. But the way mainstream media is covering, it's like it's positive news for the US economy. The good thing about the data that is released by CPI, that is from the Labor of Statistics, is that the data shows that gasoline and oil numbers fell down, and this isn't something great to be proud of in the first place. The prices were really low with the previous administration. We'll be discussing the CPI data at a very basic level and try to make a comparison of how it affects Bitcoin. We will also talk about some actions taken by SEC and CFTC, and it's mostly to do with hedge funds operating in the US, and it's more to do with digital assets. We will also discuss some not so good news about Coinbase. They had the earnings report and the numbers are not looking good for Coinbase. As a matter of fact, just before I was preparing for this podcast, there is another breaking news about Coinbase that talks about an SEC investigation in Coinbase, and that has to do with crypto yields and staking products. So we'll be discussing that as well, and most likely in the next coming days, that would be a growing concern for Coinbase. Now finally, it looks like 2022 is the year of exploits, and this time there has been another exploit, and this has to do with Curve Finance. It has more to do with duplicating the original website and how some hackers managed to steal some funds. Regarding UAE, we have two news. The first one is about PricewaterhouseCoopers, that is PwC, launches UAE cryptocurrency report, and it identifies 3 stages that facilitate model for regulation. Now, I'm not too impressed by the report, to be honest. It just talks about the current state of the cryptocurrency across the world and then compares it with UAE. If you are in the cryptocurrency space and working non-stop, it won't be a surprise what that report is all about. They do offer some suggestions which we will discuss very briefly in this report, but again the report is not out of the ordinary. The second news that we'll talk about is about an event called as the Blockchain Economy Summit that is scheduled for October 4th and 5th of this year in Dubai. Again, it is not much of a massive deal. The event looks like an okay event in comparison to, let's say, the Future Blockchain Summit, the Future Innovation Summit, and many other events that actually take place in Dubai. But we'll very briefly look at that event. So welcome everyone, it's 18 here in Dubai and you're listening to the Crypto and Coffee at 8, where we cover some top news and information pertaining to Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi and Metaverse. And how the series of episodes on the Crypto and Coffee at 8 works is, we usually cover some top news and information pertaining to the price of cryptocurrencies, some major breaking news, occasionally short and sweet news as well, news that has an impact in the cryptocurrency world. The other 2 news and information is related to Dubai, UAE and Middle East in the world of cryptocurrencies. This is followed by Ask Me Anything series where you listeners can ask any questions from 8:30 am to 9 am Gulf Standard Time regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi and Metaverse. And every Fridays, that is tomorrow, we have an episode called as Metaverse Everything where we solely focus on Metaverse. So please check out those episodes as well. The format for Metaverse Everything podcast is completely different. And what I tend to do is I also publish a daily and a weekly report via my LinkedIn profile. So please follow me on LinkedIn. My LinkedIn profile is in the show notes below. Alternatively, you can also go to my website, that is www.blockchaindxb.com, and read through the blogs under the crypto blog sections. Or you can also go to the Medium website and just type in Blockchain DXB. So let's kickstart today's episode. Today is the 11th of August. That ever since the CPI data number were out, the cryptocurrency market did actually pump, but it has gradually gone down. Now, the global crypto market as of the 11th of August is $1.14 trillion, a 4% increase over the last day. The total crypto market volume over the last 24 hours is $83.74 billion. Now, since the last 24 hours, it has gone down by 12.05%. The total volume in DeFi is currently at $8.33 billion, and DeFi accounts for 9.95% of the total crypto market 24-hour volume. The volume of stablecoins is now at $77.04 billion. Stablecoin accounts for 92.02% of the total crypto market 24-hour volume. Now, since yesterday, guys, what I'm trying to do is I'm also going to look at the comparison between Bitcoin and Ethereum. And the big question for the next quarter is, will Ethereum flip Bitcoin? So let's look at three metrics, particularly to do with Bitcoin and Ethereum. The first one is the market share. The market share of Bitcoin as of the 11th of August is $457 billion, whereas Ethereum is at $226 billion. So it is just about 50% of Bitcoin. The trading volume, though, of Bitcoin is at $32 billion, and Ethereum's 24-hour trading volume has considerably gone higher and is currently at $23 billion. The dominance of Bitcoin is at 40.12%, and Ethereum is currently at 19.90%. This metric for the next quarter, or maybe in the future, I'll constantly be comparing the market share, 24-hour volume, and the dominance between Bitcoin and Ethereum. The king of all kings, that is Bitcoin, the price is currently at $23,934. And since the last 24 hours, it is up by 2.81%. And since the last 7 days, it is up by 4.38%. Ethereum, aka First World Computer, is currently at $1,850. And there is a very high chance that, the price of Ethereum would actually shoot past the $2,000, $3,000, maybe even $4,000 by the time the merge date kicks in. But again, our price predictions are 100% right 50% of the time. But since the last 24 hours, it is up by 8.45%, and since the last 7 days, it is up by 14.65%. Binance Coin is currently at $327. Since the last 24 hours, it is marginally up by 0.02%, and since the last 7 days, it is up by 9.64%. Now, once again, guys, ever since SEC's investigation is regarding Binance, it has not made absolutely any impact on the price of Binance. Hopefully, the same thing happens with Coinbase. As a matter of fact, just a couple of minutes before going live for this podcast, I found out this news that there is an SEC investigation on Coinbase. So most likely, I'll try to cover it in tomorrow's and day after's news as well. So the big news that is circulating in the stock market and in the cryptocurrency world is the CPI data. That is the Consumer Price Index. Now, the Consumer Price Index for the month of July is out, and the inflation number is currently at 8.5%. Now listen, guys, the midterm elections takes place on the 8th of November. That is the reason why the news in the mainstream media is that inflation is slowing down. That need not necessarily be accurate. In case you guys do want to find out the official numbers on CPI and inflation, there's only one website I would recommend you guys to go to. That is the Bureau of Labor Statistics. That has the official numbers. The number shows that the data of gasoline index fell by 7.7%, but the index for electricity increased. The food index continues to be rising, which increased by 1.1% over the month, as the food and home index also rose by 1.3%. The index for shelter, medical care, motor vehicle insurance, household furnishings and operations, new vehicles and recreations were all among those that increased over the month. So the inflation is actually going up. The only matrix that is going down is the gasoline numbers. Apart from gasoline, there were also some other indexes that did actually decline for the month of July. That is airline fares, cars and trucks, communications and apparel. But overall, the inflation is still at 8.5%. So how does this impact the price of Bitcoin and cryptocurrencies? Now, immediately when the news was announced, the price of Bitcoin tanked, the price of cryptocurrency also went up. But gradually, as the news subsided, the price did actually go down. So the big question that I keep asking myself, and I would like you guys to think over, is Bitcoin apolitical? Is Bitcoin a safe haven during inflation and war? Now the answer will be surprising. Does geopolitical news impact the price of Bitcoin and cryptocurrencies? In a realistic world, these prices should not affect Bitcoin either in a positive or in a negative way. But with excessive money printing and thanks to the Inflation Reduction Act, which I talked about in my last week's episode, and with midterm elections taking place, the merge date of Ethereum set around the 19th of September, it looks like that Bitcoin and cryptocurrency prices will be pumping up. What's really interesting to note is that the stablecoin still accounts for 92% of the total crypto market 24-hour volume. So that is definitely not good. As a matter of fact, Seeking Alpha did actually publish a report that Bitcoin's price did actually pump up when the CPI numbers were out. In my LinkedIn profile, I've given you the link for the article which is published Seeking Alpha. Now this is not ideal, and if you look at it from a long-term development of Bitcoin at a macro level, this is not good because Bitcoin is created as a movement to a separation of money and the state, and news such as this should not be affecting the price of Bitcoin both in a positive and in a negative way. Now talking about laws and regulations, the US Security and Exchange Commission, or called as SEC, and the CFTC, called as Commodity Future and Trading Commission, what they have done is they have proposed requiring large advisors to certain hedge funds to report any exposure to digital assets. Now, in case if you want to find more information and if you're working in the fintech sector, if you're working in the hedge fund industry, what I would recommend you to do is Cointelegraph has written a brilliant article. They have given their own commentary on what the move by SEC and CFTC is. So the article states that the SEC and CFTC have proposed amending the confidential reporting form for certain investment advisors to private funds of at least $500 million. So the article can be found on my LinkedIn profile. Alternatively, you can also go to the Cointelegraph's website, or you can go to SEC's Twitter account, and they have provided a link on their website that gives more information. What I'm really surprised is that many people have not reacted to this particular news, and Cointelegraph's article states a fact sheet on the proposed released on Wednesday showed that the number of private funds have increased by 55% between 2008 and the third quarter of 2021. Now, according to the data from the market research firm, that is IBIS World, there were 3,841 US-based hedge funds as of 2022. So this particular news is with reference to those 3,841 US-based hedge funds. So again, a massive news if you're in the fintech sector and if you're in the hedge fund industry. Let's move on to news about Coinbase. Coinbase is definitely not having the best year in 2022, and the first half of 2022 has definitely not been ideal for Coinbase. And they recently had an earnings call report, and in that Coinbase has posted over $1 billion losses in quarter 2 of 2022, and they also saw a 64% drop in retail transactions revenue. So the official news is by Coinbase's website, and they have sent it via a shareholder letter. Now you can download it via my LinkedIn profile. So it is essentially a shareholder letter. The letter also talks about how in June, the headcount of 18% or approximately 1,100 employees were made redundant. So Coinbase is definitely not having the best year. And something which I mentioned at the start of this episode as well, just before I was supposed to go live, I found out this news that Coinbase Exchange is facing probe by the Security and Exchange Commission, that is SEC, and this is to do with the crypto yields and staking products that they have. So the company told investors that it has received investigative subpoenas from the SEC. The company has received investigation subpoenas and requests from SEC for documents and information about certain customer programs, operations, and existing and intended future products, including the company's process for listing assets, the classification of certain listed assets, its staking programs, and its stablecoins and yield-generating products. So it looks like Coinbase is, if not having one of the worst years. In the filings that Coinbase has with SEC, they did actually say that it will not have a material adverse effect on Coinbase's financial condition. One reason why Coinbase news is positive because just a week ago they announced a partnership with BlackRock. Now most likely this partnership with BlackRock could completely change the dynamics of Coinbase and cryptocurrencies. Now, needless to say, that BlackRock is, if not one of the biggest organizations in the world, probably the biggest by a long margin. Now, let's look at the final news for today. My question is 2022 turning out to be the year of hacks and exploits? Now, Core Finance, which is an on-chain liquidity using advanced bonding, has faced an exploit, and the incident was flagged online by a number of members of the wider crypto community. So what happened is that the hackers managed to clone the Curve Finance website, and what they did, they rerouted the DNS servers to the fake page. Unfortunately, users actually fell for it, and those who attempted to make use of the platform had the entire funds drained out. As a matter of fact, a little over $500,000 funds in USD coin has been lost. In case if you want to read through the article, what I would recommend you to do is Cointelegraph has provided a brilliant explanation. Even Curve Finance, what they did was they retweeted someone's post, which is going back to the 10th of August. And what that tweet says is that don't use the front end yet, investigating. That was all. But few hours ago, they tweeted that the hacker's site is already down. So looks like the problem has been resolved. Now guys, let's look at news from UAE. The first one is PwC, that is PricewaterhouseCoopers from Middle East, has launched a UAE cryptocurrency report, and they identify 3 stages that facilitate model for regulations. And this report is written by Mahmoud Al-Salah. So let's try to look at what that article is all about. PwC launches UAE cryptocurrency report, identifies 3-stage facilitator model for regulation. The report is called as the UAE Virtual Assets Market. It is essentially a report on the regulatory landscape with special focus on financial crime, compliance, and it basically answers 4 core questions. What is the driving growth in virtual assets in UAE? How does the UAE market and regulatory landscape compare with the global market? What are the regulatory implications, especially in terms of financial crime risks? And what should be the key consideration for the UAE regulators? So these are the 4 questions. And once again, guys, something which I mentioned at the start of this podcast, this report isn't something out of the extraordinary. If you're working in the cryptocurrency space, I didn't find something which I wasn't aware about. So this report seeks to answer the 4 questions by setting the backdrop, clear linkages, comparative analysis, and expertise-driven regulatory recommendations. The intended audience for this report are vast providers, banks, and regulators in the UAE. So the report is 27 pages long. It is divided essentially into 4 sections. The first section talks about the global crypto market. It talks about the history of Bitcoin, the current global market, and international crypto regulations. The second section talks about the UAE market. So it talks about the UAE share in the global crypto market, which has increased by 500% between July of 2020 and 2021. And currently, it's over $25 billion in transaction volume. Again, if you are in Dubai and are working in cryptocurrency space, this is something which will not come out as a surprising news. It also talks about the friendly regulatory regime, government support, the UAE regulatory landscape, that is VARA, that is Virtual Asset Regulatory Authority. It has information about DFSA, that is Dubai Financial Services Authority, DIFC, that is Dubai International Financial Center, FSRA, and ADGM, that is Abu Dhabi Global Market. The section 3, which talks about financial crime risk, it talks about the international guidelines and the FATF and travel rule, the UAE financial crime compliance regulatory landscape, the challenges faced, and in that hard report, it talks about 5 of the challenges that are currently being faced. And finally, in section 4, it talks about the 4 directions for UAE regulators. So essentially, they're making recommendations, and they focus on having clear regulators, few points on industry self-regulation, and international coordination and cooperation. Again, it is not something out of the ordinary. And it talks about how PwC can actually help regulators, bank, and virtual asset service providers. Now let's move on to next news. That is to do with an event which is taking place called as the Blockchain Economy Summit. Before that, let's look at what the Blockchain Economy Summit is. They claim to be the world's largest blockchain and crypto conference network, and the Blockchain Economy Summit just closed the previous chapter in Istanbul, Turkey. And what it says in the news via Zavia is that there were more than 3,000 participants from 82 countries. They have phenomenal backers such as KuCoin, Gate.io, BitJet, BitMEX, XT.com, OKX, and quite a lot more. And they also say that a Turkish pop star called Emre Erdin and MicroStrategy's Michael Saylor, the Ukrainian Deputy Minister of Digital Transformation, that is Alex Bornikov, and famous Turkish film and television star Engin Altan Düzatian, the famous entrepreneur and investor Carl Ronefeld, aka The Moon, and also Da Vinci Jeremy, who's one of the OGs of Bitcoin, were actually at that event. So it looks like they're just trying to pump this particular event. Again, I'm not too particularly excited about this particular event. The Blockchain Economy Summit takes place on the 4th till the 5th of October in Dubai, and it takes place at the Le Méridien Dubai Hotel and Conference Center, which I believe is near the Dubai airport, and this will be the 5th edition with 80 plus sponsors. In that website, they haven't mentioned any agenda yet, but they do have information about an NFT art gallery, and they also have a list of speakers. But I have this feeling that the list of speakers, they've just copy-pasted it from the previous event. So I wouldn't be surprised if a lot of the speakers that they've mentioned on the website may actually not turn out to this event. Now, the project manager called Sarvi Aman has said Dubai has a great potential in terms of regulating crypto platforms, crypto assets, and its usage. This is precisely why we want to attract global players and new startups to Dubai. So for Dubai, it is a brilliant news. And the topics that will be at the Blockchain Economy Dubai Summit will be on Bitcoin, Web3, NFTs, Metaverse, DeFi, mining. They're also going to be talking about regulation on cryptocurrencies, investing and trading on cryptocurrencies, and generally the implementation of blockchain technology in businesses and government, and quite a lot more. So again, not something which I'm personally too excited about, but I just thought I might share this particular news. So that's all for today, guys, on the Crypto and Coffee at 8 from Blockchain DXB. In case if you guys have any feedback or suggestions, please drop me an email to info@blockchaindxb.com. You can also check out my website, that is www.blockchaindxb.com. And please check out my other website, that is area2071.com, that talks everything about Metaverse. If you like listening to this, please follow this podcast, give it a 5-star rating, and share the word across. Now for the next 30 minutes, it's going to be an Ask Me Anything series, where you listeners can ask any questions about Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. Hey everyone, it's George from Blockchain DXB. You're listening to the Ask Me Anything series, where you listeners can ask any questions about Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. And remember, Monday to Thursdays, 8 a.m. to 8:30 a.m., we have Crypto and Coffee at 8, where we cover top news and information pertaining to Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. We usually cover some top news and information pertaining to the browse of cryptocurrencies, some major breaking news, occasionally short and sweet news as well. News that has an impact in the cryptocurrency world. The other two news and information is related to Dubai, UAE, and Middle East from the cryptocurrency world. What you're listening to right now is the Ask Me Anything series, where you listeners can ask any questions about Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. I have a question by Harry, who asks, how can we protect from scams, hacks, and exploits? Harry, the answer is pretty simple. Not your keys, not your crypto. At a macro level, my answer would be, whenever you buy your cryptocurrencies, be it Bitcoin, Ethereum, or anything, make sure you immediately transfer it to your hardware wallet. Needless to say that you need to remember what your private keys are. That is what the actual advice is. Apart from that, try not to investing in projects that you do not understand what it is. Try to understand what the project is. What I tell each and every one of my clients is, try to understand the fundamentals of the projects rather than listening to people. As a matter of fact, Harry, one of my clients via LinkedIn, he sent me a message on my personal mobile number, and what happened was that somebody referred to him in a Telegram post about a project, and surprisingly, he invested more than $24,000. And I tried to ask him who that person was, and what he told me was that that person is not responding to him anymore. So it's so critical that you try to understand the fundamentals of the project, try to understand who is the team behind a particular project. That all being said, Harry, it still does not mean that the projects will fail. There are quite a lot of projects. As a matter of fact, Harry, Mark Cuban, who's a multi-billionaire, he's, if not one of the most technical person so far as Ethereum is concerned. His project also had a rug pull, something which even he cannot fathom his head around. So even though you have top people in the cryptocurrency space, some high-profile people like Mark Cuban, there is a very high chance that the community could find exploits and there could be a rug pull. So that is a risk. The whole notion with cryptocurrency is high risk, high reward. My recommendation, again, Harry, this is not financial advice, stick only to Bitcoin. Personally, if you understand what Bitcoin is, you would understand what Bitcoin is not, and then you will try to compare it with other cryptocurrency projects, maybe even Ethereum, and then you can make your own decision if it is actually worthwhile trying to invest in these products. The short answer, simple, is transfer your funds into a hardware wallet. But once again, if you look at something which happened to Curve Finance today, someone duplicated the website, there is a very high chance that even though you are an expert, you could potentially fall for these scams. Just one of those situations where high risk, high reward does come with severe consequences so far as cryptocurrency is concerned. I have another question by Lang, who asks, when do you think CBDCs will become mainstream? Now, Lang, straight off the bat, CBDCs will be kicking in and will be becoming mainstream probably 2 to 5 years down the line. As much as we dislike central bank digital currencies, one benefit that it does actually provide is it does bank the unbanked. But at what cost? That is a completely different story. And that's precisely one of the reasons why politicians in the US and pretty much all Republicans are not in favor of CBDCs. Because then the whole question about privacy kicks in and the government is in full control, pretty much 80 to 90% in control of your funds. That being said, to answer your question, when will CBDCs be mainstream? I would say 2 to 5 years down the line. And by that time, the whole notion of metaverse starts to gain momentum. And something which Sam Lai from Meta Incubator also said, that because of inflation, because of deglobalization, because of the geopolitical situation between Ukraine and Russia, China and Taiwan, internal conflict in US, there is a very high possibility that the adoption of metaverse is much faster than anticipated. Now, in metaverse, there is a very high possibility that central bank digital currencies are a much better medium of exchange. I personally don't like central bank digital currencies, but if you compare it, let's say, with cryptocurrencies, I do think that CBDCs are much better. Maybe Bitcoin using Lightning Network will be also an ideal form of payment in metaverse. So 2 to 5 years down the line, when metaverse slowly gains momentum, I do think central bank digital currencies will play a massive role. So to answer your question, Lang, I do think 2 to 5 years down the line is when CBDCs will potentially gain mainstream. Also on the 26th of this month, I do have a session on CBDCs. It is completely free of cost. The event is called as Central Bank Digital Currencies, the Basics, Threats to Freedom, and its use case in the metaverse. So please feel free to go ahead and attend that session. It's completely free of cost. So that's all for today, guys, from the Ask Me Anything series from Blockchain DXB. In case if you guys have any feedback or suggestions, please drop me an email to info@blockchaindxb.com. You can also check out my website, that is www.blockchaindxb.com. And please check out my other website called area2071.com that talks everything about metaverse. And if you like listening to this, please follow this podcast, give it a 5-star rating, and share the word across. And remember, guys, Monday to Thursdays, 8 a.m. to 8:30 a.m., we have Crypto and Coffee at 8, where we cover top news and information pertaining to Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and metaverse. And how the series of episodes under Crypto and Coffee at 8 works is, we usually cover some top news and information pertaining to the price of cryptocurrencies, some major breaking news, occasionally short and sweet news as well, news that has an impact in the cryptocurrency world. The other two news and information is related to Dubai, UAE, and Middle East from the cryptocurrency world. And what you're listening to right now is the Ask Me Anything series, where you listeners can ask any questions 8:30 a.m. to 9 a.m. Gulf Standard Time regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and metaverse. Thanks so much for listening, guys. and see you guys tomorrow at the Metaverse Everything podcast. Have a great day ahead. Bye bye.